Yo, what is up? What is up? What's up, guys? We're back again. Tuesday in it, bro. And yeah, dude, we're gonna come back, try to secure a little dub. It looks like we've been chopping all fucking day. So yeah, a lot of chop. I don't even know what to even think right now. Gotta sneeze though. Oh shit, boy. Yo, what's up? What's up, Nico? What's up, bro? What's up, my guy, bro? We're going through a lot of chop right now, guys. A lot of chop. Nothing really to be seen here, bro. See if there's anything on 15 minute. Yeah, we're not saying. Nah, nothing. Nothing really on 15 minute. Hour maybe. You can go ahead and make a zone right here. I believe you can. Sorry, guys, we're going back in time right now. Back in time. A little bit back in time right there. How to make that? Okay. We got something cooking up. Today looks shit, dude. Yeah, I'm saying the market seems ass. The market does look like hot ass right now. It's like hot shit. You cooking bread today or what? Right, bro? We hope so. We fucking hope so. Let's see. See if we can find anything down here. They were just respecting this 15 minute fair value gap. 5 minute too. Yeah, looks like we're just respecting this fair value gap we have going on here. We'll go ahead and look at the daily real quick, guys. See what we got over there. It's like we're now getting into a little bit of a fresh supply zone right here, guys. Right here was our supply zone on the daily. So, very interesting day. What we want to do, all right? Crazy pump up. I think we might be trying to target these lows down here, guys. Honestly, how could we do that? Let's see. I look for shorts to figure out yesterday. Yeah, it could definitely be something.
Market?
Interesting what we got going on today. Let's see what kind of news we got going on right now. I know we got news at 9.
Bitcoin is 200K. He's low-key rallying.
For bad yaps don't work, trust. But we're like right at that fucking daily zone where look guys. This is a daily zone, right? On my days. Alright, this area's just been a hot ass though. Hot ass. We're in a good area right here, guys.
I think, oh, nothing on.
How long Powell speaking for chat?
I just sold all my food. No. Short on the road. We took it on. Yeah. Should I want to throw?
We're gonna look this up, bro. I'm away. How y'all feeling today, bro? Are y'all feeling good? Are y'all thriving today?
Good afternoon. Oh, okay.
Over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%.
We gotta pull it up.
Near-term measures of inflation expectations have moved up over recent
I'm not, Nico.
reflecting the growth market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as a driving factor. Beyond the next year or so, most measures of longer-term expectations remain consistent with our 2% inflation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range of the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace to facilitate the smooth transition to ample reserve balances. We'll continue to determine the appropriate stance of monetary policy based on the incoming data and evolving services. Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation,
I was waiting for you guys. Wait for the little fucking
mandates,
stop.
keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything
I
we
want
do
to take out these eyes
is in
right here.
service to our public
Break
mission.
above it.
We at the Federal
Just tapped into the supply zone right here. We really tapped into it during a fucking London
Look
session.
forward to your questions.
Thank you, Mr. Chairman. I'll turn to member questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following.
So this
after
guy's falling asleep in the
the
back.
initial release of the GDP report, the president is driving the economy into a recession. Chairman Powell, the latest FOMC statement described economic activity to continue to expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So, in looking at your remarks about tariffs today, and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 0.1 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower. The labor market remains solid. Prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with.
Bro, guys. Okay, we're having some movement.
For the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I've discussed, in a world with lower tariff rates?
So first, I wouldn't comment on the FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong,
your good luck charm is back, AB.
Later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And, you said it was an issue, but that you would stay in your lane and not comment on it. But here in this year, you have commented on this idea of tariffs being set by the executive branch. So
this guy gets paid
tariffs in your lane, but
we're not sure if you go one way or another.
By the Biden administration not in your lane. Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job. And we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. We're not commenting on tariffs. What our job is inflation, keeping inflation under control, and also keeping maximum employment. And when policies have what appear to be short and medium term implications, meaningful implications for that,
hurts, bro.
then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. You know, my views on price stability, I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate the sole mandate, and we've talked about that before. But I was very curious about your thoughts on a former president of the Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than, all these other factors that enter the employment picture like legislative and executive branch. What's your thought about her quote?
I personally think that's a very reasonable way to think about it.
Thank you very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell, and thank you for being here. Last week, the FOMC decided to maintain
Look at this guy's face. I don't know why.
For the federal funds rate at 4
guys like trying to make that
to
face
4.5%. While I was not surprised by the decision to hold rates steady, I was surprised by the committee's revised forecast since March, which represented a decrease of 0.3 percentage points for GDP, a similar increase for core PCE, and an uptick in the unemployment rate to 4.5%. Can you explain the incoming data that the committee has seen since March that caused it to make these adjustments?
Sure. So, first of all, these are individual. This is not a committee forecast. These are just individuals submitting their own personal.
Sorry, Greg, says we're just waiting for this one
forecast.
Stop talking.
We don't bless those as a committee. But I think people are looking at the incoming data and having a range of different judgments. If you look at the range, if you look at the central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation is projected to have moved up because of what we've seen, particularly from tariffs. And I think if you look at other outside forecasters, you'll see very much the same thing.
And what data are you looking for?
Well, we look at the incoming data on. We look at our own forecast and we ask ourselves what's likely to happen. Monetary policy has to be forward-looking. A forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stance of monetary policy as appropriate. Some analysts predict 2 rate cuts by the end of the year are still on the table. Is this a fair and accurate assumption? And what incoming data will the committee need to see to consider these cuts?
What will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain.
Hey guys, we're back on our little journey again, bro.
Back
fucking eating that ground turkey, bro.
A significant majority
chicken straight up.
But also
I just tried that bitch up inside the fucking ninja that my mom got.
A significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down a cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will, the story has been evolving and our thinking has been adapting, and that will continue.
Thank you. Chair Powell, although a ceasefire has been tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken. While at this point, Iran is seen as unlikely to close the Strait of Hormuz, that decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustment to economic projections and its stand on monetary policy?
I think it's too early to to know what any economic implications might be, and I would not want to speculate.
Ain't
like
shit
everyone
going
else, we are,
on.
of course, watching the situation.
Thank you. And Chair Powell, after reviewing the economic data following meeting last week, it seems to me that the committee is indicating that we could be headed for a situation where inflation accelerates while unemployment rises and growth becomes more sluggish. In this scenario, this will put the Fed's dual mandate of maximum employment and price stability in tension with one another. In this scenario, how does the Fed balance these priorities in order to achieve both mandates?
So they're all saying
Let me say
consolidation.
We're not facing that right now, and that isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal. Two variables, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and I would say again, we're not in that situation right now.
Thank you, Mr. Chairman.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. Heisinger of Michigan, is recognized for 5 minutes.
Thank you, Chair Hill and Chair Powell. Good to see you again. I've got a lot to cover, so we're going to try and keep this concise. But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025, quote, "We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy." I would add energy into that, by the way. "We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. This is no different than any set of policy changes at the beginning of the administration. However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to incorporate preliminary conditional estimates of how fiscal policies might impact the economy into their forecasts. This seems inconsistent, and I sidebarred with the chair to say, okay, did I hear this correctly? His question and sort of your answer. What I heard is that there was a belief that the IRA would not be inflationary, but that tariffs could be. Therefore, suddenly you and others were commenting on tariffs. And for the institution, I know you try to be consensus driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their implications, what those will be? And I think if there's different participants having different assumptions, that would render the summary of economic projections biased, meaningsless, useless, less impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, shouldn't each participant disclose what assumptions that they're using and building into that? So here's the question.
That's a great question. That really, when the summary of economic projection was originally designed and put into effect,
Grace, watch live.
The way it works is that individuals are free to make whatever assumptions
I'm barely even looking at this.
They disclose them in their speeches and things like that. So there will be situations where some people incorporate something and others don't, and we try to be transparent about that. But that's kind of the way it works. When I say we don't take it into account, I'm really talking about policy and the committee as a whole, where we won't take things into account until we know.
And you believe that the participants disclose their assumptions when they're doing their forecasts?
Well, I think they do that in their speeches. Each people go out. You may have noticed there are a lot of speeches.
I guess the opaqueness of the Fed has been something over 15 years on this committee has been debated greatly, including auditing the Fed and a number of other things that have gone on. I've got here brief moment, I do feel like I need to touch on interest rates. Not to be a shock, you asked how the family business was doing back in Michigan. Families involved in sand and gravel and aggregates and construction and things like that. It's been strong. We need more labor. We need a few other things on that, what's happening. But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly not as what some had been projecting. Yet there seems to be higher than expected, or certainly desired interest rates for many of us. And I'm curious how high interest rates. They hurt Americans who are paying car loans, credit cards, mortgages. Just this morning, you had FHFA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates, and by the way, match what the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of emerging central banks. By the way, that's your own assessment on page 33 as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that would call for us to be at a neutral level, which would be a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms. Tlaib, is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, the term they use, in the counties that I represent, that had experienced some sort of eviction during their lifetime. So that's like 50%. Black women in the two largest county, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our Black neighbors, the access to equity, the access to housing has diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession.
What the fuck, Andrew?
So we know the housing crisis, I believe, is structural. And some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates, and so forth, that drag the supply of new housing. Last month, new housing hit a 5-year low. Are you familiar with that?
This is a race.
Not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said again it hit a 5-year low. And again, I'm getting this from a source, but this sets the market up for higher inflation and more burdensome housing costs to years to come. So, Chairman Powell, I'm looking at this monetary policy framework that you guys have put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect. Well, there's also, if I may say, in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a
But don't
level
you think
people
that
can
the
afford.
restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I
But
think it
you're
restores
reducing supply.
price stability. The point of higher rates is to.
So you don't think the higher rates is impacting future supply of housing?
So I think what that does is I think interest sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It's not, over the
I need to go back to talk to
over the long
women
run,
that the
Fed
study
will not be, our policy will not be a driver of longer run housing supply in the United
okay,
States.
let me ask you, what is the difference? And honestly, confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like you guys use these terminology. What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
Those are not terms that we use particularly often.
What's supply-driven formula?
That would mean that there's not enough supply to meet demand, but at the same time, it also means there's more demand than there is supply.
So, are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious.
demand or supply.
I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together. That I do feel like it's going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home builders and everybody else. That's in the long run, that is the single thing that Congress has assigned us to do.
But you see where I'm coming from. It is impacting future supply of housing, right?
Not in the long run, no.
Okay, Mr. Chair, thank you.
The gentleman from Wisconsin, Mr. Stile, who's also the chair of our subcommittee on digital assets, financial technology, and artificial intelligence. You're recognized for 5 minutes.
Thank you, Chairman Hill. Thank you, Chairman Powell, for being with us today. I want to dive into 2 actions the Fed's recently taken to get a little additional color on. Yesterday, the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus on the core and measurable risks. Could you provide color as to whether or not any new information came to light that led to the decision of the Fed to remove that yesterday?
I'm not aware of any new information. No, we just think it's the right thing to do, and of course made an announcement on Monday under Governor Bowman's, Vice Chair Bowman's leadership.
Why would it not have been done previously? If it's the right thing to do, I agree with you. It's the right thing to do. Why was it? Any timeline is yesterday versus previously?
No, I think this is a problem that we came to understand as a problem over the course of the last couple of years, and began considering what's going on. We're hearing a lot of reports of debanking and that sort of thing.
Yeah, fucking
over the course of really 2024, came to the view that this was a serious problem that we need to address, and we've said that publicly, and now we're doing this, and so are the other agencies, by the way.
I appreciate you taking that action. I do agree that there were real political bias in some of those exams, particularly as related to regulated entities engaged in the digital asset space. Let me shift into the digital asset space if I can. Another action recently taken by the Fed, the Novel Activities Supervision Program was ended and withdrew several statements on digital asset related risks that deter bank involvement. In particular, you in the Fed, the Fed has spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
Yeah, I wouldn't be the one to be picking that up first, but what I do see is a very significant change in the tone And it really does reflect evolving thinking and the evolving status of the crypto industry. And I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets and crypto space?
So, our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is protective of safety and soundness.
Thank you very much. Let me shift gears because I want to give you just a little bit of an opportunity to comment on the housing sector once again.
Oh my goodness, bro! Why is my shit fucking up?
You correctly are trying to balance inflation and price stability, but also higher rates have a significant impact on the housing market as shelter and housing costs are a significant driver of why many families can't afford the things that they need. Can you provide colors to how to speak to that area, the impact that housing and shelter costs have on families and on inflation, with your desire to maintain price stability, the interest rates that is currently set by the Fed?
Sure. So, we realize that people are feeling high housing costs and high financing costs. In terms of inflation, we look at something called owner equivalent rent and rentals, and that's meant to capture both rented housing and owned housing. And it's been very sticky. It's been one of the stickiest parts of inflation. I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part. Really, it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work. Even then, though, we're still going to have a housing shortage.
What data do you think is leading to the reduction that the rent equivalent?
I just think it took time.
I'm just trying to get my shit ready, bro, for when I do trade.
You would think that if rents come up every year, you would think it would take 1 year or 2 years for a lack of growth in rents to show up in a lack of growth in housing prices. It turns out it takes 4 years or 3 years. If you're an existing tenant, it's a complicated thought, but if you're an existing tenant, you don't actually catch up the way you would if new tenants came in. And so that's made the measurement of inflation stickier. But I'm happy to say we've been through that period now, and we are really seeing now housing services inflation pretty close to where it was when inflation was solidly at 2%.
Thank you. I yield back.
Gentleman yields back.
All right. Now
Gentleman from California, Mr. Liccardo, is recognized for 5 minutes.
Thank you, Mr. Chair. Chairman, thank you for your testimony today. I appreciate that your dual mandate is full employment and price stability. I appreciate your efforts on behalf of our country to achieve those. My understanding is that critical data is collected by the Bureau of Labor Statistics to help formulate the indicators that you rely on, that we rely on to understand unemployment rates, CPI, and other inflation indicators. We are certainly hearing a lot about the impacts of DOGE on our workforce, and specifically about the elimination of many of those positions in BLS. Now we have a proposal in front of Congress, got $56 million in that agency. Are you concerned about the ability of your team to get accurate data and about the ability to have reliable indicators to make good decisions upon?
I wouldn't say that I'm concerned about the data today, although clearly there has been very mild degradation of the scope of the surveys, things like that. But I would say the direction of travel is something I'm concerned about, and that is measuring the U.S. economy carefully and well is a project that's been going on, and we're getting better at it for 100 years and more. And it's really important, not just for the Fed, but for Congress and for businesses, frankly, to know what really is going on in the economy. What's happening? Is growth high? Is it low? And all those sorts of things. So I think it's a smart investment to just continually try to get better at measurement of what's happening in the economy. And I don't like to see that, the kind of stories I'm reading, the idea being that the data is going to become more volatile and less reliable. It'll make it more difficult for the private sector and for you and for us. And I don't like to see that direction.
I agree. Thank you. I appreciate that it's not your role to comment on the advisability of specific policies, but given your critical role in ensuring price stability, reducing inflation. I have had conversations with, quite recently, just a week ago, with a C-suite executive of a major global retailer who informed me, because I asked, why aren't we seeing the impact of these tariffs and price data yet? And he said, it's coming. It's coming in the third quarter because it takes time for tariffs to work their way through distribution chain. Often what you have on the shelf today may have been imported 2 or 3 months ago. Is that your understanding? Do you anticipate there may be impacts down the road?
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the retailers, that what's being sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more. But I want to be honest, we really don't know how much of that's going to be passed through to the consumers. We just don't know. We won't know until we see it. It could be lower than we expect. It could be, we have to wait and see, which is kind of what we're doing.
I appreciate the uncertainty. Another thing he told me had me very concerned was that often they will increase prices on goods not subjected to tariffs to compensate for the very substantial losses they have to suffer with the increase of tariffs on relatively price elastic goods. So in other words, necessities will also tend to bear a higher price even if they're not subjected to tariffs. Is that your understanding of the potential impacts?
That very much is something that companies will tell you that they do. If they can't cover the losses on the thing that's being tariffed, they'll find other ways to do it. We actually don't have prominent examples of that yet, but that's certainly a possibility. That did happen in the last tariff episode. Washing machines and dryers.
Thank you, Mr. Chairman. And finally, there's indications in the introduction of the report that the Fed is losing its ability as we see interest rates getting closer and closer to the minimum threshold, the ability to stimulate this economy in times of recession. We haven't had a recession, or at least we haven't had an extended recession in a decade and a half. I am particularly concerned now as we are looking at debt
after like 30 minutes
that is being considered to be imposed on future generations by this particular bill. Could there be a combination of very high debt and very little room to move in monetary policy that could undermine our ability to respond to the next recession?
So we faced that issue quite a bit in the era of very low interest rates. But we're at higher levels of interest rates now, so there's significantly more room to cut than there was then.
Gentleman yields back. Gentleman from Wisconsin, Mr. Fitzgerald, you're recognized 4 or 5 minutes.
Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something we had some brief discussions about this in the past, but in September of 2024, with core inflation still being above target and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions as to whether or not the data truly supported such a move at that time, and I think some of us were surprised that it was a full 0.5%. So can you revisit that again, what the Fed was thinking at that time? Because it seems to be somewhat of an enigma now. It stands out as, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So, first of all, the inflation and employment readings were very similar then to what they are now. They weren't terribly
true.
A tenth or two.
Right.
But the difference then was you mentioned that the labor market was stable. It wasn't. The unemployment rate had actually gone up almost a full percentage point. I was very clear about this. We were very clear about it in real time too. The concern at that time was that there really hasn't been an experience, or hadn't been an experience in the modern era in which the unemployment rate has gone up close to 1%. That hasn't been followed by much higher levels of unemployment and a recession. So we were looking at that and saying, and remember, at that point,
why'd you want to go long?
What we're talking about, the federal funds rate was 5.3%, so definitely a very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So it was all about the labor market. Inflation was the same, and unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September. And it seemed like the right thing to do. And at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? So
and I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. Yeah, I bring it up because it seems like
those highs already,
everything's in place right now to kind of do the same thing, make the same move. I know this morning already you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate to do something as big as a 0.5% cut again?
Well, look, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that, but we're not. We're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 years, four meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things.
Well,
we're going to continue to adapt as the data.
But that
is
your
the difference between then and now. Then inflation was forecasted to continue to come down. Here it's forecasted to go up by all forecasts. And again, we're not overreacting to that. We're just saying, hey, as long as the economy's strong, we can take a little bit of a pause.
It's did you kind of trade this off the gut feeling?
Continue to adapt as the data comes in. If we see data that suggests that inflation's not going to produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts, and we're specifically talking to light manufacturing, there's concerns about the supply chain.
Oh, okay.
Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. I think that's one of the great lessons to be taken from the last episode. The supply chains really matter. We're watching that carefully. It's too soon to say really on that. We're not seeing it yet. But
good luck, bro.
Gentleman's time is expired.
Thank you, Chairman.
Thank you, Mr. Fisher. Gentleman from New Jersey, Scott Hammer, you recognized for
Damn, bro.
Thank you, Mr. Chairman. Chairman Powell, as a member of the Intelligence Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on our nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with the other regulators and the parts of the government that work on cyber, as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So. You're right to raise it. It's a big issue, and
you feel like you have the resources right now to be prepared for that.
Yes, I think we do. We spend a lot, and the government generally spends a lot on these things. And but you can never ever be comfortable in this area because the bad guys are always getting better. So we need to get better.
Thank you, Chairman. Switching gears, the president and members of his administration have.
Bro, why does guy keep on sending fucking money to them?
Various name calling for certain decisions you've made. I know that some people worry that the president's bullying will impact your decision making. I know you work together, and I know that and respect
up your independence. It's fucking like 2 a.m.
Anything you want to add and give you a chance to reiterate your independence to the American
people. Bro, good luck. I do think we're going to take out
the
ties, so I definitely think
we're focused on one thing, and that is we want to deliver a good economy for the American people. That's
it. Man. Have a good night, Andrew, bro.
Anything else is kind of a distraction. I don't mean to refer to any particular thing, but we stay focused on that task all the time. We always do what we think is the right thing to do. And, we live with the consequences. And I don't know how else to do the job.
Right, so the name calling and the Mr. Too Late and all that stuff, the American people shouldn't worry about that. You're focused on being independent.
Oh, yeah, never mind.
That's what I care about. I care about doing the job for the American people. The things we do matter a lot for people's lives. And that really concentrates the mind. You want to...
Guys, I fucking went to Austin the other day, and I'm not gonna lie, bro. Austin was kind of tough, bro. It's kind of tough, bro.
Take the consequences.
Thank you, Mr. Chairman. You previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement.
Recently, bro, where you been at, Sammy, bro? Fucking miss you, dog.
Both aiming to establish clear regulatory frameworks for fully reserved dollar-backed
payments. Dodge ice agents this week.
Given their design to maintain a stable value and be redeemable for U.S. dollars, the SEC or other regulators explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes.
I think it's a great thing that bills are moving. We need a stable framework on that particular issue.
Nah, bro, but I went to Austin to go help my brother move in, bro. Hey, that shit was dope as fuck. That's bro for like
high rates have also caused, we've discussed,
and like I only visited for a little bit. It's not like I'm not talking about the nightlife. Like, I didn't do any of that. But I went there. Hey, like the vibe's pretty dope, bro. I'm not gonna lie, bro.
FY 2035.
Same, bro. You been working?
Able to afford to pay off our debt at this rate.
How's that going, bro? How's work been going? But yeah, like, dude, the city was nice as fuck. It's like very lively, bro. In Houston, we have a whole bunch of homeless, right? It low key feels like they want to attack you sometimes, right? Bro, in Austin, there's like there is some homeless, obviously, right, bro? But they're low key kind of nutheads, bro. Like, I went over there, and I saw this fucking guy playing football with himself, bro. Like, he was just like, he acted like he was a quarterback. So water bottle was like this, boom, and then there's a tree and like tapped to it. I was like, what the fuck is going on in Austin, man? Hey, but like, hey, they're a lot better, bro. Not like
last week you chose to keep
a lot of these homeless in Houston, bro. I tell you, bro, like you don't know what's going on, bro. They could just be all right. Nah, Austin low key pretty nice. I want to go ahead and visit again. I went to go in his apartment, right? Hey, man, it's like there's just like, it wasn't his, but it was his girlfriend's apartment. It's like a garage, a party garage, bro. You can see over it. You see like the whole city, bro. Like at night, hey, that shit was like, what the fuck? That shit's dope as fuck. That shit, you said 2 hours. I'm gonna go ahead and look at that 2 hours. Oh, there's no 2 hours.
When the time is right, I expect that will continue.
But yeah, no, dude, it's pretty cool.
That will depend on economic factors.
And what else happened, bro? Yeah. Then I went over to his crib.
Thank you. I yield back.
His crib's nice, bro. It's like brand new apartments and shit.
Chair of our housing
it's looking pretty dope. So yeah, I'm definitely gonna visit him again, bro.
Mr. Chairman. Chairman Powell, later this week, the banking agencies.
But dude, I don't know. I just feel like I want to live in Houston, though. I definitely don't want to be moving to Austin.
Considering the
but yeah, wife update, bro. We've been applying at some fucking
the SLR.
Let me fix my hair real quick, guys.
However, our understanding is that the proposal being considered this week will not allow for treasuries to be excluded from the SLR calculation. Secretary Bessent earlier this year had argued that such a change could serve as a boost for
so a life update, bro. I've been applying at some server jobs, right? And I'm still working as a manager, right, bro? But I've just been hearing, bro, that these servers be making bank. So I was like, I need to hop in on the wave, bro. That's the only way I need to hop in.
And what is the rationale for
so yeah, dude, I've been applying at a lot of server jobs. Hopefully we get a fucking
I agree that
fucking interview or some shit, bro. You know, moves along the process. That shit would be kind of dope.
Undertaking,
but yeah, dude, fucking
fairly safe
I'm tired. Damn.
Mediation in the treasury markets.
Okay, what's going on?
This should encourage more mediation. I don't have a
so yeah, guys, that's definitely a little life update. Hopefully that works out.
But I do think it would matter. I think it was important. I've supported the leverage ratio reform for since before 2021.
Chairman,
in terms of the structure of the thing, I think we're seeking comment on a particular proposal that doesn't involve exclusion, but we're also asking a question about exclusion.
Mr. Chairman, considering the Fed temporarily excluded treasuries from the SLR calculation during the COVID pandemic, were you aware of any safety and soundness or financial stability problems that arose as a result of that decision? And if not, why was that really terminated in 2021?
So that was an emergency measure from the beginning and end. It was an emergency measure. I think, my long-held view is that we should have a permanent measure, and now we're going to. And we have an open board meeting on Wednesday afternoon.
I have to go pee, bro.
And after I finish my hearing on the Senate side, and I'm very much looking forward to putting this proposal out for comment.
Thank you. In March, the Federal Reserve, together with the FDIC and the OCC, announced that they intend to issue a notice of proposed rulemaking to repeal the 2023 Community Reinvestment Act and replace it with the legacy CRA framework. Nearly 3 months have passed since this announcement. What is the status of this project?
Well, we're going to do what we said we were going to do. It's just a question of execution, and I think you'll see that coming. This would be so Vice Chair Bowman has the job of sequencing these things, and that one's certainly coming.
Do you intend to issue a proposal that will be a clean rescission and replacement of that rulemaking, or are you considering amendments to the legacy rule?
I honestly don't know. We'll come back to you on that.
So we should know more later this week.
We might, yeah.
Okay. Finally, I'd like to build off of what Congressman Stile asked previously on the supervision of novel activities program. Do you feel any changes could be made to it to encourage innovation, and do you anticipate any such changes to the program?
I do, and I also think Governor Bowman, now Vice Chair Bowman, is someone who is actually deeply knowledgeable and experienced in supervision, and that hasn't really been the model. We've more had people who are experts in regulation. I think she brings a particular ability to move supervision in a healthy direction while also preserving safety and soundness, and that's what you mentioned is one of the dimensions in which I think that will.
So he lost 44K.
Thank you for your testimony today. I appreciate your service to the country, and with that, I yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes the ranking member of our full committee, Mrs. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I appreciate that despite the repeated attacks by the president and his cabinet on you personally, that you stood your ground and you did not bow, pressure from Trump, especially given the current state of economic uncertainty due to his policy.
No, not that. He did hard. Yeah, dude, he's down on people. If you look at his
Afterwards, you said that you and other experts continue to expect a meaningful amount of inflation due to Trump's tariffs. You said that it may take some time for the tariffs to work their way through the supply chain, but that you found, and I quote, many companies do expect, but some or all of the effect of tariffs through to the next person in the chain.
Rookie Trader? I haven't seen that name in months.
Quote, end quote. So while
Rookie Trader, bro, how you been, dog? I fucking texted you on Discord.
Other countries pay these tariffs. Can you confirm that it is indeed consumers and businesses in the United States that will bear these costs?
How you doing, Rookie Trader, bro? I haven't talked to you forever.
It can be anybody from the exporter.
Bro, backstory, fucking, again, Rookie Trader was literally like my only viewer when I first started, guys. Like now we have like a few, like 9, right? Which is like a solid, right, bro? But for months, and I think like for a good like 3 weeks, bro, Rookie Trader was literally like the only guy that would show up on my streams. Low-key clutch. We would just be yapping, bro. This is whenever I had like maybe like 15 subs, bro.
Well,
so Rookie Trader was there when I no, I already had the fun. But Rookie Trader was there whenever I got my first payout and my second payout. I think you were there. I think you took a break. Yeah, dude's been there for a cool little minute, bro. That boy Rookie Trader, man, OD for sure.
The things that are being sold at retail now, they might have been put into inventory before the tariffs in February or March. So we think we should start to see this over the summer. In the June numbers and in the July numbers. If we don't, I think we're learning here. If we see less pass through there aren't historical experiences we can consult here, really. So it may turn out that the pass-through
My
was
bad, bro.
less
It's taking
or
like
more
an internet
than we
bit.
think.
No, you're good,
And I
dude.
think we're going to be.
Were you still trading,
We'll get
rookie trader, or no? Did you kind of take a break from there?
June.
Why?
Inflation for June. We'll learn something then. We'll get it for July as we go through the summer. We should start seeing this, and if we don't, I think we're perfectly open to the idea that the pass-through will be less than we think, and if so, that'll matter for our policy.
Well, I've been talking with a lot of my constituents about these tariffs, and the question that comes up is now, is this going to only hurt maybe the big businesses? What about our small business people? What about the people that we buy goods and services from every day in our communities? Is this going to hurt big business as well as
talk your shit? Talk your shit.
Yes, I mean, I don't think it's. I think it will certainly. If you're a smaller company that maybe
so no, I'm just not starting
product,
back up.
That's a common business model these days.
That's
you may,
good.
If your product is tariff, you may be the one that's affected significantly. Whereas bigger companies.
Well, honestly, you've seen the price action, dude. So you didn't miss much.
Why do you think you can resist the president basically
a lot
telling
of bad
you what to do?
PA,
what
bro.
gives you that authority?
But lately, these last couple of days, bro, last few days, we've had some decent ones.
All I think of is how much people rely on us to get it right. We're really bad when we get it right. And that concentrates one's mind. And so that's what we think about it. We think about what's the right thing,
But yeah, dude, honestly,
we've
been doing a little bit better
my
now.
time at the Fed is have the economy be strong and have inflation be under control, have a solid labor market. I want to turn it over to my successor in that condition. Of course, that's what keeps me up at night.
But yeah, dude. What are you back on? You're back to trading evals now, rookie trader, or what?
So how are you protected? By law, by constitution? Where does your authority come from?
I think I've covered all that. I do think we're fully protected, and again, I don't think about that anymore. I think about it as let's just do our jobs. And that's what we do. We don't talk about those issues.
Yeah, dude.
And
definitely reasonable about you.
Best we can, and it's not an easy job.
You crashing out. I'm not,
willingly taking
being
on
a little bit
very
upset.
important.
I'll be upset. Appreciate it, bro. Yeah, appreciate it, bro. Appreciate you, bro. But
thank you.
We currently have $200 until we blow it down.
The gentleman yields back.
Yeah, we kind of went on a losing streak. Not losing streak. We lost 2 days. Yeah, it's like we lost 2 days, won, lost 2 days again.
Chairman Powell.
So we're kind of down for the most part.
Yesterday, Fed
we're at like 48% win rate right now. So fucking went down from 64 after that second payout to
the Fed should consider
like
lowering
48, bro.
rates.
A lot of percentage
said
down.
she is open to a rate cut.
I do appreciate it, bro. It's definitely like, dude, $3K for one fund. Hey, I'm gonna take it. Oh
very
shit.
much the same. Do you believe that we are in a position where we may be able to cut rates in July?
Oh shit.
So I would say this. I think if it turns out that inflation pressures do remain contained, then we will get to a place where we cut rates sooner rather than later. But I wouldn't want to point to a particular meeting. I don't think we need to be in any rush because the economy is still strong. The labor market is strong. If we were to see the labor market, meaningfully weaken in a way that was concerning, that would matter for that decision. And if we see inflation, continuing not to move up, we hadn't expected inflation to move up much. We do expect it to move in the summer, and if we see it not happening, we'll learn from that.
The September 2018 Teal book suggested that the Fed, seeing through tariffs' inflationary effects, is an appropriate response so long as inflation expectations are firmly anchored and that the pass-through costs are relatively short-lived. Would you agree that this assessment from the Teal book still applies to today?
I would. Those are the exact factors that we cite when we talk about this situation. Plus the size of the tariffs.
Right. So let's assess the current economic situation. The Monetary Policy Report states that longer-run inflation expectations, quote, continue to be broadly consistent with 2% inflation.
Why is my shit bugging?
And a Harvard study argued that despite the relatively quick price responses to tariff announcements, the overall magnitude of these changes remains modest. So if these conditions hold, is it not unreasonable to think that underlying inflation trends should continue its path towards 2%?
That's certainly a very defensible position. I think what what people, others on the committee think, and what I think is that this is a question we need to be careful with because it's different than it was in 2018. The difference is that we haven't had 2% inflation. In 2018, we hadn't had inflation as high as 2% for a decade. This is a different situation. We haven't fully restored price stability. And another shock, we have to be careful. If there's a meaningfully large and sustained inflation shock, we have to be careful about that. And so
I believe that's fair with the payout back on $3. Why was that lady pressing? That's the best thing she's not. He's not.
If that happens, we need to be there for it.
I don't know, bro. They just be
we're in a difficult situation.
I honestly don't even know what you're saying.
Exactly when to move, but again, if we
continue to see unless you're talking about small businesses getting affected, and that's really rezoning out a lot of them. I'm sorry.
Higher levels than we expect, and that.
So yeah, you believe they expect without a payout. I'm back on 3 evals.
Chairman Powell, economist John Taylor once noted that the Federal Reserve should deviate from its.
I'm already putting in my head, bro. Like, I mean, definitely could revive this account, but if we blow it, we blow it, bro. We fucking been profitable pretty nicely too, bro. We
should not be accompanied with an increase.
We made $3K on one funded, bro. I'm fine with that. I'm fine with that. I only paid $200 for it, really. You know,
previously you said that if you wait for inflation to get back down to 2% to cut rates, you are already too late. You also said in November 2024 that inflation was on a sustainable path to 2%. Given that the FOMC believes that interest rates now are moderately restrictive and that an oil or tariff shock may not impact underlying inflation in a significant or meaningful way, because as the monetary policy report established, inflation expectations are firmly anchored. What is the reason not to cut rates?
Well, it's uncertainty about the size and potential persistence of the potential highly uncertain inflation from tariffs. By the way, we have 5 Taylor rules in the monetary policy report. 4 of them say that the policy rate is in the right range, and the other one calls for a hike. Just for the record.
Well, back in the beginning of the Biden administration, when we talk about inflation, they increased federal spending by $2.5 trillion each year. $5 trillion in new spending. That's what gave us inflation, by printing all of this new money and borrowing. And
yes,
you did not respond to that by raising rates. In fact, you were late to raise rates. And now, again, we see a situation where we're late to cut rates. That is the challenge
here. Chair recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you, Chairman. Chairman Powell, to the best of your knowledge, has President Trump put forward a coherent tariff policy? Is that your opinion?
That is not a judgment for me to make or to discuss.
Well, what do you think?
Sir, would be
you're running
comment on the president's words.
Does the president, in your opinion, does he have a coherent tariff policy? You ought to have an opinion on that. You run our economy. This is your battlefield. Do you think he's got a good policy? Answer me.
I would never comment on the president of the United States in that way.
Damn.
All right. What do you think our policy should be?
We play no role in either establishing or commenting on tariff policy or fiscal policy, for that matter. It's not our business. We have a specific mandate. We try to stick to it.
Let me tell you something, Chairman. In my state of Georgia, I got the fastest growing tree group down there. The Port of Savannah is indeed our nation's fastest growing.
I think we missed the only setup today, bro.
Party, and it seemed.
You don't think we're gonna get a short from this? From taking out the highs?
The cost, the expenses.
I don't know. I don't think so. I feel like it's just gonna rally up the whole time.
Low key, just because like if it's good news, then we're not gonna go down, huh?
Our tariff policy.
I mean, there isn't really news. He's just
what
talking.
do I tell my
No, I know, but like if he says something
what do
positive,
we
he probably
tell
won't
the
get anywhere.
American people?
Yeah. I think he's just gonna rally up. I should have taken that long at the very bottom off that big ass red candle. Right after that, we had a green
It's a taxi.
candle. I should have gone long. It's gonna be a super long hole.
Oh yeah. I was thinking about what you told me too. How you're like, bro, since we have a red candle, have a small green up. I was like, bro, this is it, but it's choppy.
Yeah, no. I wanted it to be a little bit smaller. The green candle. I would have definitely entered.
Bro. Yeah.
Like maybe like half the size of that one. I would have gone in, bro.
Why don't you deal with this?
Looks like we're about to
Because
we're tapping into our supplies on the daily, along with the daily fair value gap to the downside.
I've got to represent.
We're about to take out the
No, probably won't take a trade until maybe PM session or whenever lunch. Maybe lunch has some
mostly pecans and poultry.
So it's already closed. I just want to wait.
Hit hard by retaliatory tariffs from key trading partners like China. Why are you running away from the tariff fight? Give us some understanding.
Honestly, this is just not our role. We are not an institution that
$4,000
comments
boat
on or analyzes decisions that the president makes.
Bro, you can't even swim.
Bro, I can swim. You can't swim.
Yes, I can.
Yours is like that swim. I was literally on the water polo team.
Really inappropriate.
Bro thinks
comment. Sorry.
There was a announcement.
We're having these regional disruptions. Our economy is in a bad way.
Yeah, this guy talks so
I want to see you and the president. You gotta get together. We got pecans in Georgia. We got peanuts. We run the biggest group. We got the fastest growing trade mechanism in the savannah.
You better sort of piss me off.
We're crushed.
Rupert?
No, Powell, bro.
Dude, why has this motherfucker been talking for over an hour, bro? This usually lasts
What
long.
do I tell?
Yeah.
That the
Wait, why?
I mean, testifies it. Sometimes it's like 2 days in a row.
Dead ass?
Experience in this terror. I think we need
His time has expired. Appreciate the gentleman from Georgia. What a woman from Florida.
Hi, thank you very much for being here. I appreciate your time. And my name is Maria Salazar. I represent the city of Miami, which is one of the cities most composed of Hispanic Americans and people that adore living the American dream.
So is Cameron back angle? What the fuck did this guy just say?
Ask you a few questions about.
Bro, this guy master of whatever keeps on sending fucking payments to them, bro.
President Trump is doing, what the administration is doing.
Master of something. This.
We do not want to enter Ottawa. We don't really want people who have committed any type of crime, even more if they're illegal.
Master disaster.
And
keep sending them money.
But we do know that unfortunately what's happening right now, after 6 months
No, keep sending them.
Mr. President,
like the people live streaming this.
that we're losing thousands
Bloomberg
and thousands
Television.
of workers. While the vice leadership has called collateral damage. And most of those people are working in three main sectors. What does that mean, bro? The other day in a tweet that he understands that we're talking about 15% of the economy: construction, hospitality, and agriculture. So my question to you
the best trade is no trade, bro.
What is the economic?
Yeah.
What is the growth effect on the economy if this type of removal of people of hands being removed from those three main top sectors?
Immigration is another area where nobody put us in charge. We're done. Congressional Budget Office and other agencies can make assessments like that. We do have a role to maximize employment. We take immigration policy. We take it as it comes. What it's obviously done is it's really reduced the amount of growth in the labor force. And so at the same time, demand for workers has been coming down as well because they've been coming down at about
one drop at a time. Reduce the growth. Why don't we talk a little bit more? Because we want to continue growth. We're the number one economy in the world.
I got to
so you're saying that what's affecting the growth?
There are two things that affect growth. One is growth in the labor force, more people working. The other thing is productivity. How much do they produce?
Show them some of your plate of Habibi.
And when you significantly slow the growth of the labor force, you will slow the growth of the economy. But I think, again, it's not.
Raj, sauce stream ended early.
Immigration policy.
Oh, no, I understand. I was just my comment.
The sauce took away Raj from me, bro. Raj barely be tapping in now.
I think that growth will slow, and
time
actually
to take Raj away from you.
And that's one of the reasons.
I can't believe you took my boy Raj away.
Now let's talk about the next 10 years. 2025 to 2035. Americans are not having enough kids.
Or am I?
So that means that we need other people, right? So over the next decade, based on the current trends that I just explained to you and that you just reiterated, will there be enough?
Oh, wait, he was injured. He said, what the fuck?
The labor needs.
What happened, Raj?
To 2025 and 2030.
Rupert said he wants to join the cause. So
I think labor economists do see which is demand.
Squatting?
Demand for
what happened? What happened?
Wait, what?
Population, the native
population. Raj said he got hurt squatting. So I was like, how'd you get hurt squatting? Should we call Rupert on Discord?
Do not have that labor force over the next 10 years. What happens?
So many things will happen. You can see a big increase in productivity, which would mean we don't need as many workers. For example, artificial intelligence could be implemented in a way that creates wide productivity gains. I wouldn't count on that, but it's possible.
You would not count on that?
Wouldn't count on it.
You would not.
No, I mean, because with productivity enhancing they typically take longer to be implemented, and then it takes a while for the gains to be shown. I think in the case of artificial intelligence, those gains are coming, but they may take longer or be less.
Alright, guys, I'm back. Low key. I don't think sauce is here yet. Oh, fuck. No way. What up?
You're thinking what's your expertise based
on what's your P&L today, Sauce?
0.
It's $34.
Do you think that
Wait, you took a trade?
Bro, took a trade.
Bro, I took it, got out, and then it pumped. I was like, alright, bro.
Bro said, let me enter.
Bro said, let me enter again, Mexicans. You see what I'm telling you, Eddie? I think we're just gonna pump the whole time. From the setup was at the very bottom.
They're grilling Powell, bro.
They're grilling Powell?
They're grilling him, bro.
I'm grabbing them, man. All right, bro. Yo, I don't think we're gonna get a pullback, guys. It's over. We should just full port longs right here.
Full port longs.
We're gonna take out these highs, bro.
We just take those highs out on
you, Mr. Chairman, and
I'm so hungry.
So I was squatting. 6 reps tickle my leg. What the fuck? What hurt my neck doing? Oh, okay. So you hurt your neck. So is your neck that's hurt, or is it your leg?
Pressure from very powerful places.
Couldn't keep straight neck. Oh, you probably got a crick in your neck, bro.
Interest rate question, and most know better that our independent monetary policy is the very bedrock of our economy. So thank you for that. Mr. Chairman, I want to talk just a little bit about
you been icing it?
Some of the technical matters associated with energy prices and inflation, because obviously turmoil in the Middle East,
fresh supply zone
prices swinging wildly, with West Texas Intermediate in the last month or so being anywhere between $61 and $75 a barrel.
Is your neck all right now, or what?
We recently saw the Iranian parliament vote to close the Strait of Hormuz, which currently handles the barrels a day, a fifth of global demand.
Are you even looking at the charts?
Last week that conflict in the Middle East.
No, I'm on Twitter.
Expedition? I was going to say you're on Expedition.
Today, the United States does not import.
There's the move.
Energy. We call ourselves energy.
Is he still talking?
Yeah, dude.
But I hear the argument
hell no.
that I think is wrong, that because we're energy
You
self-sufficient,
have a spotter.
somehow we are insulated from
Yeah,
global energy price market
definitely be it
prices.
right there.
Can you
Always get a
comment on
spotter
that?
if it's
Is there
super
any
heavy.
validity to the notion
Or
that
did you just put
American
the belts right
consumers of
next to me,
energy
like
are
the
not
rack,
subject
where
to
it's like if
global
I
swings in
fell, I
energy
just
prices?
squat a little bit. Gets off.
So
Neck not good, but
the
manageable.
price of oil is set globally, right?
Do some stretches on your neck,
If you go back
like this.
a few years, the thought
Go
Give
was
some
that
head,
sides.
bro.
globally
It helps.
we had a natural shock
You
absorber,
right.
which is that we would just
Hell
drill
no.
more.
Like you grab a band,
Is
bro.
that we would, if prices went up, we would drill more.
And like that's how
We
you
wouldn't have
hold it
these
like back
sustained
of your
price
head.
shocks that we had during the
It's
1970s and the
like
early
that.
80s. That is actually
I'll do a whole bunch
reversing
of
now.
neck
You
exercises.
know, the
Like,
oil industry in the U.S. is being much more careful and focused on return on investment than they were, having been burned with overcapacity.
Right, and I mean, yeah, in the long run, you can invest in additional extraction technologies, but this does not respond to day-to-day spot prices. So
not quickly.
The point I'm trying to make is that the conflict in the Middle East, if it
mark your
resulted
cheeks
in
right now. I'm taking my third
$120
jaws to run.
barrel oil
All right,
prices
rookie
below oil
trader,
prices
bro.
in
See you tomorrow, man.
2022, that would have a fairly
Appreciate you tapping
substantial
back in again, bro.
inflationary impact.
Missed
Is the
you.
market
Is that correct?
cheeks or are you
We would certainly
cheeks?
feel that.
I'm
As
cheeks.
we discussed earlier, there's a lot of lore around looking through oil price shocks, but that depends on the facts and circumstances.
What, as a technical matter, we tend to refer to CPI, which is a
Rupert
basket
is
of
just
goods
in
and
here
services
not
that measure the price
speaking.
changes.
I know,
Roughly
bro. Just
speaking,
wanted to hear our
what
voices.
What
percentage
the fuck?
of that basket is comprised of energy?
Oh shit, bro. Just woke up.
I don't have that on the top of my head. It's
Bro never trades?
of course. The
Why would I
consumption
trade when
would be
he's
much less than
speaking?
it was in the 70s as a
Bro, he
percentage.
didn't trade yesterday?
Well, let me reinforce
It
that.
just
It
seems
Portion of your
was so
it's
easy.
just not good. You, uh,
What, you're gonna say some bullshit of how I didn't trade, but I did?
Happen in the Middle East in a
I
month,
just saw a lot of break-even
6 month or
trades,
a year.
Wait, what the fuck?
So
or
technically,
red
I
trades.
took I took 3 winning trades yesterday.
price for a barrel of oil
And 1 break even. Like
does
what?
the American household begin
Not
to
very.
feel inflationary
Not.
effects?
It's
So
not
we're
the
around
Emiliano I know.
$75 a barrel roughly right
Alright, bro.
now. At what price point does the American household begin to feel some inflationary
Well,
effects?
if he's just gonna
Don't know
keep
the
on
numbers
speaking, I
for sure.
guess.
I
I
mean,
guess we just have to
frankly, it's too
wait.
early to say
We're just in an
when
uptrend
that's going to
until
happen.
we
We
get
just don't
a
know that. I
Drake
wouldn't want to
Drake
throw out a
candle.
specific number. If prices went up materially, people would feel that.
Okay.
I'm never saying that again.
Yeah,
Why
Monkey
would
Daddy
I
Candle.
why would I speak
Again,
about another man's candle, bro, like that? That's kinda gay.
Bro, I was talking
WTI
about
per
my candle.
barrel
I said,
about
what the fuck?
Bro, what the fuck? I never
in
I'd be saying Emiliano
2022.
candle.
Bro said, oh my god, it's Eddie
What do
Candle.
your models suggest
Nobody
would
says it.
occur to
Oh,
inflation, and how would
Raj.
it influence the Fed's
I
thinking?
thought it would, but honestly, no, bro. We just kept pumping, bro. And they've already
Well, let's just say there's
ended
a
it,
big price
so
spike in that range.
I guess not, bro. I think we're in the clear now.
And
But yeah, dude, as soon as we started war, we started off low, then we just fucking went
we would ask ourselves, should we react to this? So,
skyrocketed
for
all the way
example,
fucking
during
up.
what we called the Arab Spring back in the early
Bro
teens,
thinks this is a skyrocket. This is
prices
a
went up a lot, and that
bullshit
there was a
rocket.
discussion, and I think the market
Bullshit.
started to look through that. And the question you'd be asking to yourself, because by the time you react, the price comes back down. I think the question today would be, is the situation different, and what would be the implications of those differences?
Gentleman's time has expired.
Gentlemen's
Bum
time has
bum
expired.
ba-dum,
Chair
bum bum.
recognizes the gentleman from North Carolina, Mr. Moore. You're recognized for 5 minutes.
I wonder how Octavia did today, guys. Let's go check.
Bro's obsessed with her.
20K.
Standard setting bodies like
Chill.
the Basel Committee for
I
Banking
saw
Supervision. Their
you.
goal is to promote better harmonization of capital flows and regulatory standards.
Guys,
The
should I eat
document
pizza for
addresses
breakfast?
implementation of Basel III in-game
I'm
demonstration
joking. I
of
don't even eat
pitfalls
breakfast,
for
guys.
the
Come on.
U.S. as a file
I
for
feel like you
shares
eat that
legal
every
in
day, so
international
maybe
lending.
switch
That's
it
why
up.
both Democrats and Republicans
Bro, can nobody can
shot down
understand you,
former
bro?
Vice Chair Michael
I said I
Hall's
feel
proposals,
you
which
eat
made
that
capital
every day, so
investments
maybe
that will
switch it
limit
up.
U.S. firms and businesses
Bruh, what
at a
the
cost
fuck?
disadvantage. Do you
I
agree
don't
that the
eat
United
pizza every
States
day.
should
What the
only
fuck?
implement international standards in a way that is consistent with our domestic legal and regulatory systems?
I do.
It's
I appreciate the Federal
giving. Don't
Reserve's
trade
efforts
this.
yesterday to end the use of reputational risk
It's
Yeah, I
as
think
a
giving
I'm gonna
example
go
of
make some
response. This
fucking
supervisory
food.
practice was used as a
low
tool to
key.
pressure banks to refrain from offering financial services to politically
Ooh,
disadvantaged individuals or industries. What further steps is the Federal Reserve taking to help usher in these changes, such
Low
as
key.
ending examination practices that informally encourage?
Yeah, guys, we're in stream, bro. I'm gonna go ahead and make some food. I need to wash my clothes anyways.
So we're
I don't think we're gonna
So
get much of a move. If we
as soon
do,
as
I will
bro
go live
ends,
again.
we get like the biggest move ever.
I'm telling you, that's exactly what's gonna happen. I'm telling you, we're gonna touch this and we're gonna go. And if we do that in the next 3 minutes, then you know I'm already in, guys. But yeah, I'm gonna go ahead and end stream for now. Appreciate y'all tuning in. Raj, good luck with your neck. And yep, see y'all later.